There is a cycle that's been going on for centuries. And I discovered this in the 90s. Now, when I say I discovered it, I came upon it and wanted to know why no one else was talking about it. And I've talked about this for 2 decades now. And a lot of people get this cycle incorrect. They don't understand it. A lot of people think this way because they're mistaught. So, what I want to do today is talk to you about commodities, physical assets, and the stock market. And they have this very, very interesting relationship that's been going on between them for centuries. Stick around, I'll talk about it. All right, I'm RC Peck. This is Fearless Wealth, and I want to talk to you about, drumroll, commodities. But not just commodities. I want to talk to you about commodities and its relationship or the relationship to the stock market because it's really interesting. So I want to start with this chart. And this is a chart I actually built about 2 decades ago. Of course, I've updated it over that time period. But I came across this information when I was in my 20s, also known as the 1990s. And what I noticed was there's this relationship between what I call physical assets, you can call them commodities, and paper assets or stocks. So you can say stocks versus commodities or physical stuff versus paper stuff, stocks. And you can see on the screen here what I noticed or what I came upon because I didn't discover it. Someone else discovered it before I did. And it's very unpopular. How do I know it's unpopular? Because you've never heard of it. So if you look at the screen, you can see that there's almost this cycle between when you want to be in stocks, when you want to be in commodities, right? So just to describe what we're looking at on the screen here, there's 4 columns. Calendar years is the first column. The second column is the return of the CRB index, which is the commodity index during those time periods over on the left here. And then the third column is, I call it paper, but it's the S&P 500 returns during those exact same time periods. And then lastly, you just see the length of those time periods. And I circled the clear winner. So from 1914 to 1930, the clear winner was stocks went up 159%, commodities went down 14%. And then the baton got handed to commodities. Between 1930 and 1947, commodities went up 244%, and the stock market went down 30%. The baton got handed over, and then from 1947 to 1965, stocks crushed it, going up 503%. Commodities were down. And so we can see how this handoff happens. 1965 to 1981, you wanted to be in commodities. 1982 to 2000, you wanted to be in stocks. 2000 to 2008, you wanted to be in commodities. 2008 to 2020, you wanted to be in, wait for it, stocks. And now here we are at the start of the next cycle. And so far in this 2-year period, commodities are up, that's hard to say a lot, are up 195%, and stocks are up 79%. Now, I still made the stock number red because it is a much, much, much smaller number than the commodities. So what's going on here? If you look at this price chart right here, all I'm showing you on here is a relative price chart of the S&P 500 divided by the CRB index, which is the commodity index, or one of the biggest or most followed commodity index. And if that black line is going higher, that means stocks outperformed commodities. If the black line falls in those columns, that means commodities outperformed. So it doesn't necessarily mean that stocks fell, though usually they do. And so as you zoom out and look at this, those are 6 blocks of time. Each block of time is a decade. And now we're on a new block of time. This new decade we're in is called the 2020s. And so far, it is a decade of commodities. And we've already had 2 decades of commodities. We had the 1970s, you wanted to own commodities. And we had something called the 2000s, and you wanted to own commodities. Now, this is where people get things wrong. What I hear is commodities are way too dangerous. They're way too risky. They're for 20-year-olds. I'm 60 or 70. I have no reason to be in commodities. These are a dangerous, dangerous place. So that's a really weird thing to think if you actually know how to look at price charts. Because I think what they're being taught is commodities were a horrible place to be in the 80s and the 90s. horrible place to be, and in the 60s and in the 2010s. But during the 70s and 2000s and 2020s, they are the place to be. And this is the cycle that I'm talking about, the cycle that cycles between stocks and commodities. When commodities are in an uptrend and they're outperforming stocks, that is not risky. That is not unstable. That is not dangerous. That's actually stability. Now, there's three, I don't call it major ways you can buy. I mean, there's probably lots of tracking symbols for the commodity index. I have three of the more followed ones on here. So I'm just showing you them when they really, this chart is 2 years old. So it has a 2-year time frame on it. And so you have one called DBC. You have one called RJI. Jim Rogers started that one, the elements, Jim Rogers elements. And then you have the GSCI commodity index, which is the green one. And so when I studied when commodities do well, what I noticed is the commodity that typically outperforms other commodities are all the energy commodities. And the green line has more energy in it, with the red line, that's red line's DBC, green line is GSG. So the time you want to have a more, first of all, they're all going up. So let's just focus that they're all going up. And actually what I could do is this goes from April to May. I could throw SPY on here and it's going to reset. I hate that it does that. But let me go back to April 2020, May 27th. Let's just do it one whole year there. So you can see that commodities are the three lines bunched together. They were going up when the S&P was going up, but somewhere at the beginning of 2021, or maybe at the beginning of 2021, stocks started going up at a shallower rate and commodities kept going up. And that's what we saw all through 2021 and what we're seeing through 2022. Truly kind of a separating of these. And this is not an anomaly. This happened in the 2000s and it happened in the 1970s. And really we should expect it to continue because investing in energy companies and mining companies is an ugly business. It's one we need to do. And so the commodity sector, the commodity asset class, they go through these long periods of time where no one invests any money in it. And all of a sudden we do not have enough capacity. And that's what's going on again today in the 2020s. So the question is, how do we understand this? How do we play it? How do we understand the relationship between the two? And I think the big thing is to look at price charts and really understand that there have been cycles that have been happening between commodities and stocks way, way before you were investing. Now, I only have data on this type of price chart software. I have the stock charts that goes back to the 60s. But the first price chart, actually, it wasn't a price chart, was that chart showing it goes back 110 years. And if you look at data coming out of the UK, we can actually go back a couple hundred years and see that the same cycle happens. And so that's where we are today. Now, here's the bad news. The bad news is when commodities are doing well relative to the S&P 500 and commodities are going up in absolute terms, very unstable economically. Very unstable. And just think of the 2000s. We had two 50+% corrections. We also had a 50+% correction in 1974. So over the last 6 decades, the only time we had these 50+% corrections in the stock market, it was during periods where the commodities were leading for the decade. And that's the period we're in today. So I think the big takeaway is it's very likely that the 2020s are going to be more unstable and possibly be more like the 2000s and the 1970s from a stock market point of view. And so that means for stability, for growth, for sanity, you're going to want to think about having a larger exposure to commodities. Thanks everybody for being in my world. I appreciate you watching these videos. And if you like this video, you'll like our other videos. Please leave a comment. Let me know where I got it right, where I got it wrong, what I completely missed, what I'm missing, like what I'm not talking about. And I also want everyone to know that I do manage people's money. So if you have curiosity or interest in what that might look like, a powerfully simple way to manage money, you can go ahead and just get a hold of us. Super easy. You could just literally send an email, hello@fearlesswealth.com. and we'll get back to you right away. Thanks, everyone. I appreciate you, and you guys have a good rest of your day or rest of your weekend whenever you're watching this. Okay, thanks.